Big news for Canadian home buyers. Starting December 15th, 2024, we're seeing some of the biggest mortgage changes in over a decade. These updates could make it easier for you to buy your dream home, or it possibly could save your money on your mortgage. What I want today is break it all down for you and see what it really means for you in Canada. Hi, I'm Sean Ryan with Blue Coast Realty, and the real estate market, as we know, is evolving fast. And understanding these new mortgage rules is key to really staying ahead. So whether you're a first-time home buyer or looking to move up or planning a mortgage renewal or maybe a switch, today we're diving into what these changes mean and how you could use them to your advantage. So the first one is the extended 30-year amortization. So the 30-year amortization are back for first-time home buyers and new builds. But what does that mean for you? Lower the monthly payments. For example, a $500,000 mortgage with a 25-year term costs about $2,800 per month. But once you move that to a 30-year term, it's about $2,500 a month. So about $300 a month. So it's about an 8 to 10% saver. That's a game changer for affordability. Just to keep in mind though, the longer term does mean paying a higher interest over the time. The next one is higher insured cap mortgages. So before it used to be up to 1 mil, now it's up to 1.5 million. This is huge for buyers in competitive markets like Toronto and Vancouver, but it will also benefit those move-up buyers here in Sarnia. For example, under the old rules, buying a $1.2 million home required 20% down payment or $240,000. Now with the new rules, you only need about $95,000, and that's a big difference and opens up more options for buyers. This was a really good one. The third one is the stress test removal for mortgage transfers. Switching lenders just got easier. The removal of the 2% stress test for mortgage transfers means you can shop around for better rates without worrying about requalifying. This change puts back the buyer in the hands of the buyer and the consumer and negotiate rates. It's gonna save you thousands of dollars. And especially since 55% of Canadian mortgages are coming up for renewal over the next 2 years, this is a perfect time to be exploring options and see how competitive it's going to make the banks. The next thing is, the key consideration is, while these changes improve accessibility, there are trade-offs. Like we mentioned before, longer amortization means a higher overall interest cost. Smaller down payments might get you into the market faster, but they're gonna come with a higher mortgage insurance premiums. The key is balancing really affordability with your long-term financial goals. The next thing is market impact. What does this mean for the Canadian housing market in Sarnia and Lambton more specifically? Well, we'll likely see more demand in the $1 million to $1.5 million range, potentially driving up some prices higher in those lower price ranges. But on the flip side, these changes could encourage more homeowners to list their properties, creating opportunities for buyers. These new rules are designed to empower home buyers, but success comes down to strategy. So whether you're buying your first home or making the move, now's a good time to act and start talking about your possibilities. And here at Blue Coast Realty, we're helping to guide you every step of the way. Reach out to us. We'd love to discuss these changes and how it will impact your buying power, and connect you with trusted mortgage advisors to take advantage of these new pivotal moments in real estate. So thanks for watching and welcome home to the Blue Coast.